Welcome, and here we're looking at the S&P 500, and we're looking for, as you know, the A wave, the B wave pretty much held in place here, even though it came quite high here, and well, the B wave can actually take out the high here as well, but we're looking for wave C down, and we're looking for a bit of a pattern. Well, this is the main structure here, the ABC, of course, and this is the A, the B, and the C in a bit more detailed, and it's a 5-3-5 structure. So that's what we're looking for. We're looking at this move down through here now in this 5-wave structure. How far it will come down? Well, that's the 50 and 60% retracement level. That's the norm, but the 1800 would obviously have order there as well. So let's just watch it develop. And once we can count these 5 waves here, then we can start to make a move from that point there. I've labelled this in 2 ways here in terms of this black wave here and the blue wave here. The black labelling here creates the wave 2 here, and we go up from that point. But the thing with corrections is that they can get sort of larger in a sense. So we could end up, and just putting this on the table, I don't think it's the case, but it's something we can work through if the case be. But basically, this A, B, and C here could eventually just be the A wave, so to speak. So we bring the A wave to here, and the B wave back up to here, and then the C wave down. So we have that wave 2 down here, so it can just get a bit larger as such. So bringing back up here, it would be the A, the B, and the C, and that would just be the A wave. Then we'll get a B wave, and then we'll get a C wave like this here. So it could just get a little bit larger, like just double in size, so to speak. So it's just something we need to be mindful of, and we'll track that. It's not the bias at this stage, but as I mentioned, we'll just keep an eye on that. Okay, that said, the Dow Jones is exactly the same as well. It's just a 15-minute chart here. So we're looking same thing, the A, the B, and 5 waves down in the C wave here as such, like this here. It can come below this. It doesn't have to. It just needs to produce those 5 waves, and then we'll be looking to buy from that point, making new highs here. And this wave should be quite strong if it's going to be a wave 3 here. Okay, same with the DAX as well. Just on the 4-hour chart here, just to highlight the 9,500, the midpoint. 5 is always the midpoint, and once again we'll be looking for 5 waves down through here, and then our buying from here. So midweek, we could be buying sort of late as Friday, maybe early as Wednesday. Let's see how it unfolds. As there's catalysts, there's news events that drive these things, and whatnot. And this is the FTSE here. Now the FTSE is different from the DAX and the S&P 500 and the Dow Jones and Russell and so forth, and NASDAQ and stuff. So this is more in line with the S&P ASX 200 CFD, or the SPY here. So basically we're counting 5 waves up here, and we're narrowing it down on Friday to from wave 4 to wave 5 here, and we're narrowing it down to 1, 2, 3, 4, 5 to finish. So that's the completion there, and we should move lower from that point. But at the same time, it looks like we've only got 3 waves down and not 5, so we would need to see further development, and we'll be looking down to this low here. At the same time, this is a nice classic trading levels pattern across this level here. So we have the arrival, the reaction, the first high above the level, and then the A, the B, and the C here, and then from that point we'll push up from there. So now this is a really nice picture here. Now this is the same as our local market, the SPY or the ASX CFD, but it's not as pretty. So when we look at that, we can go into here, and this is just the daily chart. And first of all, just want to point out that we're at the 28th of October highs over here. So that's why it's finding resistance here. This wave structure up through here is not very clear, and I can only attempt to do my best in counting it as such, as you can see through here. But the best count from this wave 4 here, the best count we've got looking for wave 5 up through here, would be this in place here now, in line with the FTSE, of course. The FTSE is the same, it's just that it's 10 times bigger than our local market. So from here we were looking up for 1, back for 2, up for 3, back for 4, and up for 5. Now none of these waves count very well. Like this move here is like still in 3 waves here, you know. So yeah, I mean, it could. I just don't know, you know. It could just come down like this and then move up from there as well. So I don't know, but what I can say is that if we get support on 5450 tested support, excuse me for that. If we get, this is the count from wave 4, the 1, that's okay. I can see that. That's nice. 5 waves. 2's fine. 3's a bit dodgy, and this 5th wave here is a bit dodgy as well. It's more like it's in 3 waves. It's more like a B wave, like an A, B, and C wave coming down here and then pushing up. So I'm just a little bit unsure. It's just, you know, sometimes they're clear, sometimes they're not. What do you do? You know, well, I guess we trade the support here, and you know, if you traded long from here and moved up through here, well, you know, you got group 2, and you know, you got the daily resistance up there from the old highs and things. But anyway, if you're trading using the trading levels, if you're above the market and you're going up, the price point that you're working off, the 54.50 here, if you're you know, if the market breaches that, then you have to get out. That's the rule. All right, so. If you keep that rule there, it'll keep you safe. A small loss is a good loss. Yeah, look, I think there's a top in here in line with the FTSE, but I can't make heads or tails of the count. That's the bottom line for it here. But we do have a rough sort of 5-wave structure up here in line with the FTSE, so we could have it here. So you know, I'd wait if get a really nice support on 450 here, or just allow it to come down. And I wouldn't even trade it down, because you're trading against a trend. If you're going to do that, well then this is the spot, the actual it's the March contracts, the actual SPY CFD here. You can see that each one of these has got a higher higher low here, great sort of robo situation. So if we do get a new low here, you could short it and put the stop up there, but obviously you're trading against the trend. And if the market had to come back down in a reasonably sort of fashionable way to, you know, if this is wave 1 up here, I would expect this to come down as, you know, an A and a B and a C here to sort of get some sort of you know, retracement level to even, you know, 38% or even something like that. But I have noticed, and you would too, that our local market, when it has a bull run, it can just, you know, keep having very small corrections all the way up. So we need to be mindful of that, and that's why we need to buy on supports like the 54.50. Okay, so that's it really. Okay, cheers.